All right. So I'm here with John Moy. John is an investor. He's purchased a duplex conversion in Welland, and it's just completed. He has it ready for rent right now. But even before being a investor in the Niagara region, John has purchased properties, in Toronto, in Windsor, and he's involved in other types of investments. So, John, why don't you share just a little bit about yourself, just to give a bit of a background?
Yeah, sure. So my name's John. I invest with my wife. We have two condos in Toronto. We have our home in Scarborough. We have an investment property in Windsor, this new one in Welland, and we have a cottage. But we did not have all those things at the beginning. It's obviously been a long journey, and we didn't intend to be real estate investors at the very beginning. We just kind of purchased along, and we didn't sell. We just kept refinancing, adding new properties, and so that's kind of how we get started and how we're here net today.
Awesome. So those first two condos, they were primary residences at one point, and then you sort of moved to the next and just kept the previous property as a rental property. Is that
Exactly? Yeah.
Awesome. What is it about real estate, like when you made that decision? Because most people don't do that, right? Most people, when they buy a home, when they move to the next one, they typically sell the home, take the money, and just buy the next property. What made you decide to keep it?
Yeah, it kind of goes back to both of our family's philosophy of never selling. They kind of just always advise us to just keep adding and never sell and just let it grow and appreciate it. And then at the end of the day, you'll have a pretty big portfolio that you can retire on.
Interesting. So, do your parents own rentals as well, or?
On my side of the family, no. They've kind of always house hacked.
Okay.
So when I grew up, I always had tenants in the basement and stuff like that. So
okay, interesting.
I didn't realize at the time when I was young, but as we kind of went along this journey, it kind of made sense to me what they were doing. So that was pretty interesting for me to realize what they were doing back then.
Yeah, that is interesting because when we think about this idea of house hacking, you're almost an example for parents who are worried about it. That do they want to have a full home just for themselves and their kids because they want a comfortable place? But it's almost the opposite, where if you house hack while you have kids, maybe your kids learn a thing or two just going through that experience, and they decide to do it themselves as well, right? So
yeah, it kind of made me not afraid to do it when I started doing it, because then I knew that they had done it, so it kind of made me more comfortable to go with that route.
Yeah, no, that's a good one. That's very interesting, actually. You are one of the clients of mine that actually manage all your rentals. You don't have any property managers. You get help here and there when you need a specific task or function done, but you still keep it in-house, right?
Yeah, I find that anything administrative, I'll manage on my own.
Okay.
Anything that requires, serviceman or handyman, I'm definitely not the person to do that, and I definitely don't want to do that.
Yeah.
So I hired that out to the professionals.
Why don't you share, other than the numbers, which we'll get into in a minute, what was it about this particular home that made you want to move forward? So I know we saw a couple of homes that day. This was obviously the best one, but when you saw it, what appealed to you about this home?
Yeah, I think as we were walking through it and just talking over with you, we kind of walked through what the layout could be with you, and I kind of put my shoes in perspective of a renter and how I would use that space and if I would enjoy it.
Yeah.
And with the layout that you recommended, it really made sense from a renter's perspective. And yeah, if it were me and if I were a renter, I would definitely want to rent that place.
Yeah. Your home is actually very unique, right? Because the space was quite big even in the basement, but because of the windows in the lowest level only being on one side, we were forced to go with a 2-bedroom layout, but then it created the opportunity for that second full washroom in the basement, which like very few people have done. And I guess people will see in the walkthrough video, but the master bedroom is this massive long room. It has the ensuite, and it has like this long walk-in closet that used to be the cold room, right under the front porch. So that's now fully finished into this like extended walk-in closet, right?
It's a massive master with ensuite master closet. Like,
yeah,
it's pretty cool.
It's ridiculous, man. And because of the layout, because it's like a 4-level back split, even the living room and the kitchen area still has a lot of natural light, right? Because you have those huge windows in that level. So it's really something. But you had to have that vision in your mind, right? Because when we first saw it, why don't you describe like what the home was when you bought it, like the condition it was in?
It wasn't in bad condition when you kind of look back at it. I mean, I don't know if you have the original photos, but the main level that was lived in, I don't think it was updated in a very long time. So
Mhm.
definitely needed some cosmetic updates. Bathroom needed to be gutted
Yeah,
just to bring it to the current style. But the basement was, the first level of the lower unit was semi-finished with the existing bathroom.
yeah,
Um,
yeah.
and then the lowest level was pretty much unfinished.
That's right.
There's a few things there, but it wasn't any like drywall or any structure put up. So mostly unfinished basement. And then, yeah, it was just cosmetic upstairs.
Yeah, yeah. No, it definitely, you needed to have a bit of a vision though, because that lower level, especially the lowest level, was just unfinished, just this blank space, right? Quite a bit of space, but we only had windows on the one side, so we had to figure out how do you make this work. And the layout that you eventually came up to was awesome, right? Because you were able to just maximize that so much.
Yeah, I give you and Jordan credit for that as well, right? Because you guys kind of helped design that space to what it is today.
Yeah, yeah. And Jordan, for those who may not know, is our designer architect who does all the drawings and the permits and the plans for the basement suite. So he's definitely a huge part of all our projects, because he really helps us to maximize it. And I remember your home was one of the few homes at the inspection we found more things that we liked versus problems. Like we found, what was it? We like a 1-inch water line, which is a huge bonus. So for those who don't know, in the city of Welland, in order to put a basement suite, especially if you're trying to add like a second washroom in the basement, so 3 washrooms in the home, if you're trying to do more in terms of water fixture units, so that's
Laundry, dishwasher. Yeah.
exactly, yeah. So you need to have at least a 3/4 water line, but preferably a 1-inch water line. And many homes actually don't have that. They may have like a 5/8 or a 1/2 inch, in which case, if you really want to maximize it, you need to upgrade the water line. So it's a $4,000 or $5,000 expense, right? So by having that 1-inch line already done, perfect. Um, what else? Like even the upstairs washroom, sorry, the basement upper level washroom was actually in pretty good shape, right? Did you end up doing
I
much to
didn't
it?
touch that room at all, except for, just some finishes like a new
Yeah,
vanity,
yeah,
new toilet. That was about it that I changed for that
yeah,
room.
yeah.
Yeah, that was it.
Yeah, that was also already in good shape. So that was a nice plus, because especially when we get into the numbers, your cost of doing the basement suite wasn't that much more than most other basement suites, but because you had the existing washroom, you now got a second washroom, right?
Yeah,
Or
exactly.
yeah, or you could have just tried to reduce the cost even more and just stayed with the one washroom. But I think when people see the walkthrough video, they will really appreciate why doing it the way you did it made a lot of sense, right? So all right, let's get into the numbers a little bit here. So let me share my screen here. We initially saw it was listed at 395. We were able to get actually a pretty significant discount off of that purchase price at 380. So a typical down payment on a property like this would be 76,000. Why don't you share a little bit about the moment when we put the offer? Because if you remember, that time was right during
Very.
COVID, right?
Yeah, I mean, I can't remember when. I think it was like February, March timeframe of
It had to be
2020.
early March, I believe. Early March
Yeah,
before the lockdown started, but it was like right.
just as it was happening. Yep.
Yeah,
So yeah, I remember. I think we saw it before then. But then as we were putting in the offers, that's when the lockdown was in full effect,
yeah,
and so showings were way down. People were not buying houses
yeah,
because they were just afraid, right? So, but we were ready to kind of go in on this deal because of what we ran through with the numbers and just our overall perspective on willing to invest in Welland. So we went ahead with it, and that's why we were able to get down to 380 from
yeah,
395.
yeah. Because I remember even our conversation with the listing agent. He had other listings where the number of showing requests had come, like when he initially listed, it was quite high, and it had almost come to zero, where no one was booking showings as we were in the negotiation process. So he literally told the seller, listen, you have an offer. And we went in with a pretty strong offer from a condition standpoint, because we only put the inspection condition, I believe, for like 2 or 3 days. So it was a tight conditional period. So I remember the conversation at that time. He basically told the seller, listen, you have an offer. If you don't take it, you will likely not sell, because the next few weeks at that point, no one was expecting the activity to increase. So it really put some pressure on them that, okay, you know what, they have something in front of them, they need to work with us, right? So
Yeah, exactly.
yeah, that really worked out. So
yeah, not the case anymore, but yeah, back then it worked in our favor.
Yeah, now this same home, before the renovations you've done, it's probably going in the 450, 460 range, just as it is. So if you can imagine that's a massive difference in such a short time, because what are we now? December, right?
Or
So
like nine months
9
back.
months later. That's crazy. In terms of your renovation budget, so you ended up spending a total of around 80,000. So why don't you describe some of the items that you got done as part of this renovation? What was involved?
Pretty much everything you think of. So as you know, we had the drawings done by Jordan, and then we had to go with all new plumbing in the basement, because we put in a new bathroom, we put in new laundry, and a new kitchen, right? So plumbing had to be done. We split the hydro for both units, so that had to be done as well. And then the rest of it, just as you would do with any other major renovations: drywall, paint, your finishes, so like flooring, new kitchen cabinets, so all that, really, that's included here.
Yeah, so a big part of it was all just the requirements needed to create a legal basement apartment, right? Some of the fire separation, soundproofing, and just making it a functional space. But you did a little bit more than, I would say, most investors, where you also updated the upper level as well, right? Because like you mentioned, the bathroom upstairs was really dated, so you gutted that, really made it nice, and even the flooring and paint, and just really freshening up that upper unit.
Yeah, exactly. The upper unit, there wasn't much, like you mentioned, it's mostly cosmetic with the exception of the bathroom. We really want to freshen it up just from a rental perspective, making it more attractive than other places. So we decided to go an extra step and do the upstairs a little bit more than others.
Yeah. And I think it really paid off, because this was a home that it had really good bones, right? It was built in the 70s. It was like a solid home. It just, no one's really put money into really renovating, updating, freshening it up. So the money you spent really made a difference, because it was already a good home, but now you've just made it a much more appealing space for a tenant to live, right? So I think it made a big difference. In terms of ARV, so recently there's been quite a few sales that have happened in St. Catharines in particular, in the 560 all the way up to, I think, 570, 580 for legal duplexes. And recently, one of our other clients also just got a refinance of about 570. You're in the process now for the refinance. It hasn't come back yet. But our expectation is that we will get around that 570 mark. If it's a bit less, it's not the end of the world, but the hope is to get around that number. If you were to get that 570 refinance value, your new mortgage would be 80% of that amount, so 456,000. However, your cost, which is your purchase price of 380 and your renovation of 80,000, ends up being 460,000. So if that refinance comes through at 570, you will actually be in this deal for just $5,000 of your own money, right? So you've then been able to pull out basically your renovation cost and your down payment, which is like, that's the BRRRR strategy. But I will say this for the investors looking at this, thinking that this is the type of deal that they want. Our conversation, when you purchase this home, we did not have this expectation as the result. Why don't you share, like, when you purchased home, what were you actually expecting in terms of the end result?
I think the numbers we're talking about, maybe 500. But with uncertain times, we didn't know which way it would swing.
Exactly.
So yeah, we took a risk and it paid off here.
Yeah, exactly.
Yeah, it took a lot of luck to get to this, to get to where we are today.
And I think that's one of the key points that I will say when it comes to making these kind of decisions. If you're only focused on achieving a BRRRR, there's such a narrow margin of properties that will fit that requirement. And you'll usually be pushed into the rougher areas of town, buying properties that really need a significant amount of work. So when we looked at this deal, we were not looking necessarily at the upside on the equity. We were more looking at, hey, does this property cash flow? We knew more or less the renovation money, you're going to get it out, right? You're putting the money into the property, more or less the value has to go up by at least that amount. But there was that uncertainty of, yeah, we don't know is the value of properties going down, up, but this was going to be a longer term investment that would have positive cash flow. So in the short term, if the values did come down, that was not, you weren't just going to sell it. This was a long term investment, right? But
Yep.
now on the other side of it, you may have, well, you have all of your money potentially coming out, right? You've created new equity of close to 110,000, part of which was actually just properties appreciating in general, which was now if the same home sells at 560, you've already made that 85,000 just on natural appreciation. But then the other part is the forced equity, right? You've added value, you've renovated, you've created a new suite. It is very interesting because you've achieved what so many investors desperately want, but you achieved it by not focusing on it and by focusing on the fundamentals of like just a long-term buy and hold solid cash flow investment property. And then all of a sudden you get both, right? You get the BRRR and you get just a solid long-term investment. So it's really cool to see that.
Yeah, pretty lucky on our part too, right? So
Yeah. And this is what I find, right? It may seem like luck, but at the same time, you made the conscious effort of being invested in real estate. You already had other properties. You could have just sat it out, right? You could have said, hey, COVID, let's just take a break, see what happens. And I've had a few clients, unfortunately, tell me that just March, April time, they told me, you know what, the uncertainty is too much. We're going to wait till the summer, see how it pans out. And for some of those clients, they really missed out because they had the opportunity of buying properties at prices similar to this, right? But because they waited, it's now 50, 60,000 more, right? That same equivalent property. So yes, the outcome was lucky, but the action you took was definitely not lucky, right? You made the consistent effort to, when you saw a good opportunity in front of you, to pull the trigger, move forward despite the uncertainty. And in this case, it paid off in such a short period of time.
yeah, just we had a long-term view on it, like you said. So it really helped protect us in that kind of thinking.
That's right. Yeah. That's the best way to look at it, right? Whenever people look at it as such a short term, like they want to be out of the property in 6 months, 1 year, 2 years, who knows what's going to happen in the future, right? It's a lot of very wealthy people try to predict where the market goes, and they're either wrong or they're lucky, right? It's the toughest thing to do, and so many investors, especially getting started, think that, oh, we can time it, we can figure out something that everyone else doesn't know, which we digress. All right, let's keep going here. So this particular property, once you refinance the property at that new ARV of 570, your new mortgage payment is going to be around 1,638. So that's with a 1.8% mortgage interest rate, 30-year mortgage. Your property taxes currently are around 247. Your insurance for a duplex about 130. You're only paying the gas and water because you split the hydrometers. You're able to get rent plus hydro. So gas and water, we're approximating around 250. It actually could be less than that, but we usually try to give a bit of a buffer. Just some months are higher, some months are lower. So all in all, your expenses on this property are going to be $2,265 per month, but that includes the mortgage pay down. And right now, your new mortgage of 1,638, that I've looked at some of the mortgage calculators nowadays, and much more than 50% is going towards paying off the principal. So you probably have even $900 to $1,000 of that just paying down the mortgage every single month. So it's a huge benefit now. In terms of cash flow, these are rents that are these are not set yet because you've just completed. So they're available for rent. You're in the process, but these are numbers that I feel quite confidently you should be able to achieve. Just the quality of the units you've created are, there. Especially that basement is something to really see. Two bathrooms and the massive bedroom size walk-in closet. It's very unique. Pretty good rent, $1,750 upstairs, $1,500 in the basement, plus hydro, total of $3,250. And your expenses at $2,265. you end up with a cash flow just less than $1,000, just less than 1,000.
A little bit more.
maybe a year later, if you do your 2% rental increase, you can get it up to $1,000. Oh boy, but that's a really good number, right?
It is, and I think when we were first playing around with the numbers of evaluating this property, we were somewhere around like 600, 700.
Yeah,
we weren't sure.
exactly.
But yeah, seeing this number today, it's pretty rewarding.
Yeah, I mean, this is the unicorn of properties, right? You're able to pull out all your money and have close to $1,000 of cash flow, and it's definitely checked off all the boxes. But again, you exactly said what I feel most investors need to look at, which is sometimes your cash flow may not be this high when you start, especially, right? So my personal perspective is if a property can cash flow $500 or more in this market, you're good to go. You need to pull the trigger and get started, because you may have these better outcomes in terms of more equity, more cash flow even, right? If rental rates increase. If you're looking for that $1,000 a month of cash flow, if you're looking for pulling out all your equity, you'll just be looking for years. And then if prices keep increasing, you're just going to be falling behind, right? But definitely by having that expectation that, you were saying $600, and now all of a sudden you get everything, right? You get the bonus of this extra cash flow, which is really cool to see, actually. So
yeah,